base metals. Where do you invest in inflation then?
I think that resource-related stocks continue to be a good play. They may come under downward pressure when entire equity markets are selling off, but in the longer run, exposure to energy as well as food, I think, will be a winning bet. I wouldn't be that sure about base metals because if the developed world continues to slow very sharply, they may see some further downside. In terms of precious metals, a lot of them face similar downside except for gold, which would benefit from continued inflationary pressures worldwide.
We'll come back to Dariusz just a second, Liz. I just want to get your view. One of the interesting things is here's what's already discounted. The stock market's a discounting mechanism. And you take Persimmon this morning, which is a UK house builder that reported, OK? But the stock's gone a long way. You know, it's gone from sort of well north of £12. It's down to in the £2 range right now. That's a big drop. I mean, profits are dropping, but nowhere near as much as the stock price. And PE's gone from sort of 12 down to sort of 5 today. So when you look at that and you think, well, there's a lot that has been priced in. Very bearish markdowns have already occurred.
Market's gone ahead of the curve, I think, on that. But what they're worried about, a lot of these companies, Persimmon, Taylor Wimpey, is are they going to be able to breach their covenants? The problem was they were too aggressive in the good times and they built ahead of the market. There is a huge overhang of property and new houses and they can't get rid of them. And the market's looking at that. There are some of these companies that are just not going to survive.
No, I take that in exception with the housing companies. But I just wonder if that has happened generally to the stock market, whether we've seen an awful lot of discounting of future bad news, generally speaking.
I think that's right, and I think also some of the stocks have just gone down too far. I mean, at the moment you have, when everything went up on the rise, there were some that were carried up. So if they weren't that good, they still went up. What you've got now is you've got very good companies who are caught in this, who are coming down too low, and that's when I think people will want to buy.
Dariusz, hi, this is Christine again. Let me ask you about, the stagflation scenario. I mean, a lot of countries, of course, everywhere else, Taiwan today reported higher than expected inflation, all these concerns about inflation as well in China elsewhere. How bad is the problem going to get for economies here in Asia?
I think that stagflation may occur in economies where central banks are targeting headline inflation, which means that they cannot do anything about weaker growth if energy and food prices are rising. This would be the developed world, Japan, the Eurozone, to some degree the UK. Here in Asia, although inflation continues to rise and will reach double digits in more countries, growth will be sustained by domestic demand. So there will be inflation, but will not be stagflation. The economies will continue to expand. And to some degree it's comforting. However, the danger is that inflation will hurt the poorest the most, and this may threaten political stability. This is the biggest question mark and the biggest threat in my mind to our region.
Economic stability leading to political instability. Dariusz, we'll have to keep a watch on that particular issue. Thank you very much. Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour, and thank you very much as well to our other panelists, Alyssa Bai, Investment Manager at Charles Stanley.